Hello traders and welcome back to the channel. If you've ever hesitated before clicking that trade, if fear, greed, or frustration have ever clouded your judgment, you're not alone and you're not broken. What separates winning traders from everyone else isn't a secret strategy or a magic indicator. It's psychology. And no one understood the trader's mind better than Mark Douglas, author of Trading in the Zone and The Disciplined Trader. In this video, we're diving deep into 25 life-changing trading psychology lessons that can help you master your mindset, control your emotions, and build true consistency in the market. These are the same lessons professional traders live by, and now they're yours. Let's get started. When it comes to trading, most people focus on strategies, entries, exits, indicators, but the real foundation of consistent profitability starts in your mind. Without the right mindset, even the best system will eventually break down. Let's dive into the core beliefs and mental frameworks that Mark Douglas taught, ideas that redefine how successful traders think. Lesson 1. Accept uncertainty. The market is a place of infinite possibilities. Every tick, every candle, every move, it's all influenced by countless variables beyond your control. Mark Douglas reminds us, certainty is an illusion. Most traders lose because they crave control. They wait for the perfect setup, the perfect signal, the perfect moment. But the truth is, the market doesn't owe you predictability. Trying to control outcomes only leads to fear, hesitation, and poor decisions. The most liberating and profitable shift you can make is to embrace uncertainty, to stop demanding guarantees and start managing probabilities instead. Lesson 2. Think in probabilities. This is the cornerstone of Douglas's work. He teaches that trading isn't about being right. It's about thinking like a casino. Casinos don't care about any single hand of poker or spin of the roulette wheel. Why? Because they have an edge. They know that over hundreds or thousands of repetitions, the math will work in their favor. As a trader, you need to do the same. You're not trying to win every trade. You're trying to follow your plan with consistency, knowing that your edge will play out over time. Think about this. Even a strategy with just a 55% win rate can make you rich if you execute it with discipline. But if you treat each trade like a personal test of your intelligence or ability, you'll always be on an emotional roller coaster. And that, Douglas warns, is a fast track to ruin. Lesson 3. Focus on process, not outcome. Here's a hard truth. You can do everything right and still lose money on a trade. That doesn't mean your plan was wrong. It means the outcome was random. Success in trading isn't about winning today. It's about executing your process flawlessly over time. Douglas emphasizes that real traders don't chase wins. They chase consistency of behavior. They focus on what they can control, following the rules, managing risk, executing without hesitation. If your strategy has a statistical edge, your only job is to stick to it. Every trade becomes just another data point in the bigger game, and that mindset, that commitment to process over profit, is what separates winners from gamblers. Lesson 4. The market owes you nothing. You can study for months, analyze every indicator, follow all the news, and still lose. Why? Because the market isn't fair. It's not a teacher, not a parent, not a friend. It's just a reflection of mass psychology, billions of decisions, all colliding in real time. Mark Douglas reminds us that the market doesn't care about your hopes, your needs, or your effort. And that's a good thing. When you stop expecting the market to reward you, you stop feeling betrayed when things don't go your way. You stop taking losses personally. You start thinking objectively. This is where real growth begins. You're no longer reacting to the market, you're responding to it with clarity and calm. Lesson 5. Confidence comes from acceptance, not prediction. Most traders try to build confidence by being right. They think, if I win enough, I'll feel confident. But Douglas flips that idea on its head. True confidence doesn't come from being right. It comes from knowing you don't have to be right. When you accept that any trade can lose and you're okay with that, your fear disappears. You stop hesitating. You stop overanalyzing. You execute with calm precision, not because you know what will happen, but because you've accepted what might. That's the mindset of a professional. They don't try to control the market. They control themselves. Lesson 6. Detach from the need to be right. This one's big. Most traders tie their self-worth to being right. When they win, they feel smart. When they lose, they feel stupid, right? But this emotional attachment is dangerous. It causes traders to hold on to losing trades, to avoid stop losses, to double down just to prove the market wrong. Douglas says, being wrong doesn't mean you're a failure. It means you're a trader, because even the best traders are wrong often. Detach your ego from the outcome, and you'll trade with more freedom, more objectivity, and more consistency. Summary: build your mental foundation. These lessons aren't just tips, they're the mental infrastructure of elite trading. Until you master these core concepts, no strategy will save you. But once you shift your mindset, accept uncertainty, think in probabilities, follow the process, you'll be trading like a professional, not a hopeful amateur. So as we move forward in this video, keep this foundation in mind. Every advanced lesson, every emotional challenge, every tool for discipline, it all builds on this mental framework. This is how you trade in the zone. This is how you win long term. Let's move to the next phase, mastering your emotions. If you've ever closed a trade too early or held on to a losing position just hoping the market would turn, if you've ever hesitated out of fear or jumped in out of frustration, then you already know your biggest trading battle isn't on the chart. It's in your mind. In this section, we'll explore how Mark Douglas helps traders confront and conquer their most dangerous opponent, their own emotions. Lesson 7. Fear of loss is a learned response. From childhood, we're taught to avoid mistakes. In school, mistakes are punished. In life, failures are judged. So it's no surprise that when traders face losses, they panic, they freeze, they react emotionally. But Douglas challenges this conditioning. He reminds us, in trading, losses are not mistakes. They are part of the process. Even a perfectly executed trade can result in a loss, and that doesn't mean you did anything wrong. When you reframe loss as a business cost, not a personal failure, the fear begins to lose its grip. You become emotionally free to take trades without the paralyzing need to be perfect. Lesson 8. Pre-accept risk to stay calm. One of Douglas's most practical tools, accept the risk before you place the trade. That means before you hit buy or sell, ask yourself, am I truly okay losing this amount? Will I still feel in control if this trade doesn't work? If the answer is no, you're not ready. When you enter a trade hoping not to lose, you're trading emotionally. But when you accept the potential loss up front, the outcome no longer controls your mindset. Whether it wins or loses, you remain grounded. This single shift, risk acceptance, can transform your trading from reactive to professional. Lesson 9. Overcoming revenge trading. Here's a trap most traders fall into at some point. You take a loss, it stings, and suddenly you're not trading anymore. You're fighting. Revenge trading is one of the most destructive emotional responses in trading. It's the urge to get it all back now. But as Douglas warns, trading out of anger or desperation only leads to deeper losses. Revenge trading hijacks your brain. You abandon your plan, you overtrade, you increase position sizes, and before you know it, a small mistake becomes a major drawdown. The fix? Awareness. When you feel that emotional heat rising, step away, breathe, reset. Remind yourself, your job is to follow the plan, not to win back losses. Lesson 10. Greed is just uncontrolled hope. While fear keeps traders from acting, greed causes them to act too much and too soon. Greed isn't always loud or obvious. Sometimes it's subtle, like refusing to take profits because it might go further, or doubling down because this could be the big one. Douglas says that greed is really hope that's disconnected from a plan. When you have a system, when you trust your edge, you don't need to hope, you just execute. Wanting more isn't wrong, but trading based on want instead of rules will always lead to emotional instability. Lesson 11. Emotional swings create inconsistency. One day you feel confident, the next you hesitate. Some trades feel easy, others feel terrifying. Welcome to the emotional roller coaster that destroys most traders. Douglas explains that inconsistent results come from inconsistent mindsets. If you're always reacting to wins and losses emotionally, you'll never be able to build a repeatable process. The key is emotional neutrality. That means a win doesn't make you reckless, a loss doesn't make you fearful. Each trade is just one of many. Emotional neutrality is not about suppressing feelings. It's about observing them without letting them control your behavior. Lesson 12. Detachment is power. Detachment is not about being cold or careless. It's about freedom. Freedom from outcomes. Douglas reminds us, you are not your trades, you are not your P&L. When you can truly separate your self-worth from your performance, trading becomes clearer, cleaner, calmer. This emotional distance gives you the power to make decisions based on logic, not fear, not greed, not ego. You don't fear losses because you've accepted them. You don't chase wins because you know they'll come if you stick to your process. Detachment isn't a lack of passion, it's the highest form of mental discipline. Lesson 13. Self-awareness is your superpower. Most trading mistakes don't happen because of bad strategies. They happen because of blind spots, emotional triggers you haven't yet noticed. Douglas teaches that self-awareness is the first step to emotional control. That means asking, why did I hesitate here? Why did I exit early? Why do I feel anxious before every trade? When you can answer those questions honestly, you begin to see your emotional patterns. And when you can see them, you can change them. Keep a journal. Note your emotions. Over time, you'll see the loops: fear, revenge, greed, hesitation, and learn how to break them. Mastering emotions is not a destination, it's a practice. You will always feel. There will always be nerves, excitement, doubt, but that doesn't mean your emotions have to control you. Mark Douglas teaches us that the goal isn't to eliminate emotions. The goal is to become aware of them and act independently of them. That's how professionals think. That's how you build consistency. That's how you gain true confidence, not from results, but from emotional control. When you master your emotions, you unlock your true edge. And now that we've laid the emotional groundwork, let's move into the next phase: developing discipline and execution, the engine of consistent trading. In trading, it's not what you know, it's what you do consistently that counts. You can have the perfect trading strategy, you can master your emotions, but if you don't have the discipline to execute your edge, none of it matters. Discipline is the glue that holds it all together, and without it, even the most skilled traders fall apart. Let's dive into how Mark Douglas breaks down the true role of discipline in trading and why execution is your most valuable asset. Lesson 14. Discipline, intelligence. A common trap for traders is believing that intelligence alone leads to success, that if they just learn more, read more, analyze more, they'll win. But Douglas reminds us, this game doesn't reward the smartest. It rewards the most disciplined. The market doesn't care how much you know. It only responds to what you do. If your actions don't match your rules, your knowledge is useless. Discipline is about acting according to plan, not feeling. It's the ability to follow through when everything in your brain is screaming to do the opposite. Lesson 15. Build structure, then submit to it. One of Douglas's core beliefs is that structure creates freedom. When you build a system with clear rules, entry, exit, risk, you remove the need for emotional decision-making. But here's the key: you must submit to that structure. It's not enough to have a plan. You have to trust it, even when it feels uncomfortable, even when your last three trades were losers, even when your gut says, just this once, let's skip the stop loss. Discipline means trading like a robot, even when your human instincts beg for control. Lesson 16. The market tempts you to break rules. The market is like a never-ending casino, flashing signals, sudden reversals, tempting patterns. Every minute, it gives you a reason to doubt your plan, to enter too early, to skip confirmation, to chase price. This is not a flaw in the system. It's the nature of the game. Douglas teaches that discipline is not just about resisting losses. It's about resisting the market's constant seduction to act impulsively. Every time you break a rule, you weaken your confidence. Every time you follow your plan, you build it. Lesson 17. One trade means nothing. A common emotional mistake is giving too much weight to one trade. It goes well and you feel invincible. It goes wrong and you question everything. But Douglas says one trade means absolutely nothing. The outcome of a single trade is random. It's only over dozens, even hundreds of trades that your edge shows up. Discipline helps you zoom out. It allows you to treat every trade the same, whether it's your first or your 50th. Consistency in behavior creates consistency in results. Lesson 18. Remove the gray area. Many traders fail because their plans have too much flexibility. They say things like, I'll see how the market feels. I might take profit early if it looks weak. I'll widen my stop if the candle wicks a little. This gray area is where discipline dies. Douglas says ambiguity breeds inconsistency. A well structured plan removes interpretation. It tells you exactly when to enter, where to place your stop, when to get out, and most importantly, when to do nothing. The less you leave to chance, the easier it becomes to stay disciplined. Lesson 19. Track behavior, not just results. Too many traders only review their P&L, but Douglas argues profit is a lagging indicator. Behavior is the leading one. Instead of asking, how much did I make? Start asking, did I follow my plan perfectly? Did I respect my stop loss? Did I trade from logic or emotion? Keeping a behavioral journal helps you identify patterns in your execution. Over time, this data becomes your mirror. It shows you whether you're becoming more disciplined or drifting into inconsistency. Lesson 20. Discipline is a daily practice. Here's something Douglas says that hits hard. Discipline is not a switch, it's a muscle. You don't become disciplined once and for all. You practice discipline every single trade, every single day. And like any muscle, it grows stronger the more you use it. Start small. Commit to taking only trades that meet your setup. Commit to never moving your stop. Commit to logging every trade you take. You don't need perfection, you need consistency. That's how discipline turns into habit. Lesson 21. Discipline protects you from emotional swings. The true power of discipline isn't just consistency, it's emotional freedom. When you trade with rules, you remove the drama. You're no longer chasing highs or panicking on dips. Douglas explains that disciplined traders experience less stress, not more. Why? Because they've already decided what to do before the trade even begins. The market becomes less threatening when you know that you control your actions, no matter what it does. Discipline is the engine of your edge. Without discipline, your strategy is just a theory. With discipline, it becomes a machine. Mark Douglas reminds us that successful trading isn't about perfection. It's about executing a plan regardless of how you feel. And the more you practice, the more automatic it becomes. This is where real traders are made, not in the setup, not in the analysis, but in the moment of decision. So the next time you're tempted to deviate, ask yourself, do I want to feel good right now or win long term? Choose discipline every time. Next, we'll explore how to handle wins, losses, and market randomness with emotional maturity in Part 4, Risk and Money Mindset. Let's be honest, money is emotional. It represents survival, freedom, dreams, even self-worth. So when you risk money in the market, you're not just risking numbers on a screen, you're risking how you feel about yourself. Mark Douglas teaches us that unless you change your relationship with risk and money, you'll always be one bad trade away from emotional disaster. Let's break down how to develop a healthy risk mindset and why mastering this is non-negotiable for long-term trading success. Lesson 22. Fully accept the risk before you enter. Ask yourself, before I place this trade, am I truly okay with losing the amount I'm risking? If the answer is anything other than a confident yes, you're trading with emotional resistance. Douglas says, until you accept the risk, you're not free to trade. When you hope not to lose, you're emotionally tied to the outcome. That creates tension, anxiety, and bad decisions. But when you define the risk clearly and mentally accept the loss, you remove the emotional pressure. Now you can focus on execution instead of protection. Lesson 23. Losses are business expenses, not failures. Most traders treat losses like personal attacks. They get frustrated, angry, even ashamed. But Douglas reframes the entire concept. Losses are simply part of the business. Think of a restaurant owner who buys food inventory. If some of that food goes unsold, is it a failure? No, it's just the cost of doing business. As a trader, your job is to take setups with an edge. Some will work, some won't. Losing is not failing, it's math. Once you internalize this, every loss becomes emotionally neutral. Lesson 24. Release emotional attachment to money. This one is deep. Douglas explains that most traders lose because they care too much about the money. They see a trade not as a probability, but as a paycheck. And when money equals identity, every tick against you feels like a personal crisis. Here's the truth. Money is not your self-worth. It's just the scorecard. The market doesn't care what the money means to you. It simply rewards consistency and execution. If you're emotionally tied to money, you'll hesitate on valid trades, exit winners too early, or hold losers too long. Detaching doesn't mean not caring, it means not panicking. Lesson 25: Risk what you can emotionally afford to lose. Douglas introduces a powerful test. Can you lose this amount and still execute your next trade without hesitation? If not, you're risking too much. Many traders focus on account size or percentages, but emotional tolerance is just as important. Risk must match your emotional capacity. It's better to risk less and execute well than to risk too much and blow your discipline under pressure. Reducing position size doesn't make you weak, it makes you smart. Lesson 26: Avoid the all-in mentality. Have you ever thought, if this trade works, I'll recover all my losses? If I just double size on this setup, I'll make back what I lost yesterday? This is the trap Douglas warns about: risking too much because you want too much. This mindset turns trading into gambling. It's rooted in emotion, not strategy. Professional traders never go all in. They go in with precision, with a plan, and with predefined risk. The moment you start trading to get back at the market, you've already lost. Lesson 27: Winning streaks can be dangerous too. We talk a lot about losing, but what about winning? After a series of wins, it's easy to feel like the market is easy. You loosen your rules, increase your size, get sloppy, and then the crash. Douglas reminds us overconfidence is just as dangerous as fear. After a winning streak, return to baseline. Review your process. Were the wins from skill or luck? Don't let euphoria blind you to risk. True professionalism is measured by how you behave after both success and failure. Lesson 28: Define your maximum daily risk limit. Do you know when to stop? Douglas recommends setting a daily loss limit, a clear boundary that says, if I hit this amount, I walk away for the day, no questions asked. Why? Because the longer you stay after emotional damage, the worse it gets. A daily stop loss protects not just your capital, but your mental capital. It enforces discipline, it prevents revenge trading, and most importantly, it builds trust between you and yourself. Lesson 29: Normalize numbers with mental rehearsal. Here's a surprising idea. Many traders fail when the dollar amount gets too big. They can trade $100 risk per trade with ease, but the moment it becomes $1,000 or $10,000, they freeze. Douglas recommends mental rehearsal to normalize the numbers. Visualize taking bigger trades calmly. Imagine hitting your stop loss without flinching. When your mind becomes comfortable with the amount, your behavior becomes consistent, no matter the size. Lesson 30: Focus on execution, not earnings. At the end of the day, Douglas says, the money is a byproduct. If you chase money, you'll chase trades. But if you chase process, money will chase you. Focus on flawless execution, proper risk management, consistent behavior, and let the law of large numbers take care of the rest. The best traders don't ask, how much can I make today? They ask, how well did I follow my plan? That mindset, over time, is what builds wealth. Master risk, master the game. Trading is a business of uncertainty. But your response to that uncertainty, that's entirely up to you. By reframing your relationship with risk, detaching from money, and treating each trade like a probability, not a paycheck, you become free. Free to trade without fear, free to follow your edge, free to grow consistently. As Mark Douglas said, when you truly accept the risks, you will be at peace with whatever the market does. Coming up next, Part 5: Long-Term Consistency and the Probability Mindset, where we explore how to build lasting success, one trade at a time. By now, you understand the fundamentals. Control your emotions, follow your plan, manage your risk. But even with all those elements in place, there's still one piece that determines whether you succeed for a month or a lifetime. That piece is consistency. And the key to consistency is learning to think in probabilities. Mark Douglas taught that trading is not about being right, it's about behaving right over time. Let's explore how professional traders build unshakable consistency and why thinking in probabilities is the core of every long-term winner. Lesson 31: One trade means nothing. Series of trades mean everything. This is one of Douglas's most powerful insights. The outcome of a single trade is random. It doesn't matter how great the setup looks. Even the best strategies can lose. But here's the good news. If your edge is real, it doesn't need to win every time. It just needs to win over time. Your job isn't to predict the next outcome. Your job is to execute the plan over many trades and let the law of large numbers work in your favor. Think in batches: 20 trades, 50 trades, 100 trades. Zoom out and stop treating each trade like a personal referendum. Lesson 32. Stop grading yourself by short term results. Too many traders ride an emotional roller coaster. They feel brilliant after a win, they feel worthless after a loss. But Douglas argues this mindset is toxic. It keeps you reactive, not consistent. Instead, judge your trading by one thing: did I follow my process? If yes, it was a good trade, even if it lost. If no, it was a bad trade, even if it won. This shift turns trading into a performance game, not a results game. And performance is something you can control. Lesson 33. Build habits, not just trades. Consistency doesn't come from luck. It comes from habits, repeated behaviors that become automatic. Habits like waiting for confirmation, always using a stop loss, journaling every trade, stepping away after hitting a loss limit. These small routines build a framework you can rely on. Douglas teaches that you are the system. If you're not consistent, your strategy won't be either. Don't just look for the next great setup, build the discipline engine behind your trades. Lesson 34. Detach from being right, attach to being consistent. Many traders fall into the "I need to be right" trap. They want to win every trade, they want validation. But this obsession is fatal. It causes you to hold losers too long and break your rules chasing wins. Douglas says, let go of the need to be right and replace it with the need to be consistent. Your ego doesn't pay your bills, your edge does, and your edge only works if you follow it every time. Create a probabilistic mindset. This is the heart of Mark Douglas's teachings. He says, anything can happen. Every moment is unique. There is a random distribution between wins and losses over a series of trades. Let's break that down. Anything can happen means no trade is certain. Every moment is unique means the market doesn't owe you a pattern. Random distribution means good trades lose sometimes, and that's normal. Once you accept this, something magical happens. You stop needing to predict. You start managing trades objectively. That's the probabilistic mindset, and it's the mental software of every successful trader. Lesson 36. Losses are the price of admission. Here's a truth few want to hear. Losses are inevitable. You can't skip them. You can't skip them. You can't avoid them. And the more you fear them, the more damage they cause. Douglas reframes losses as the cost of doing business. You pay small, controlled losses to stay in the game. Just like a store pays rent, just like a pilot experiences turbulence, traders pay losses to access long-term opportunity. Accept that truth, and consistency becomes easier. Lesson 37. Control what you can, release what you can't. You can't control whether this trade wins. You can't control the market's next move, but you can control your position size, your stop loss, your decision to follow or break your rules. Douglas emphasizes your power as a trader comes from staying consistent with what you can control. That's where discipline becomes your edge. Measure progress by execution, not profits. Most traders think if I made money today, I did well, but profits are noisy. They fluctuate. You could win from luck or lose from randomness. Douglas teaches you to measure success by your execution. Did you follow your plan? Did you skip trades outside your setup? Did you manage emotions and avoid impulses? These questions lead to growth. Growth leads to consistency. Consistency leads to profits. Lesson 39. Journal the process, not just the result. A consistent trader is a self-aware trader. Keep a log, not just of trades, but of your mindset, why you took the trade, how you felt during it, whether you followed your rules. This builds a feedback loop. You spot patterns, you catch mistakes, you refine behavior. Your journal becomes a mirror, and consistency starts with knowing yourself. Lesson 40. The edge only works if you work it. Here's the final truth. A trading edge doesn't guarantee anything. It simply gives you a statistical advantage if you apply it with discipline, emotional control, and consistency. Douglas reminds us, your edge won't work unless you do. Trading isn't about chasing the perfect setup. It's about becoming the kind of trader who can execute the setup again and again, regardless of emotion. That's the mindset that wins over time. Consistency isn't exciting, but it's everything. The market rewards consistency of thought, behavior, and action, not luck, not flashes of brilliance, just grounded, disciplined execution again and again and again. When you think in probabilities, you're no longer tied to any one trade. You're playing the long game. And that's the only game worth playing. Coming up next, Part 6, Reprogramming Beliefs and Identity. We'll explore how your subconscious beliefs shape your trading outcomes and how to rewire them for long-term success. You can master your strategy, you can manage your risk, you can even control your emotions. But if your deep subconscious beliefs about money, success, and yourself are working against you, you'll keep sabotaging your own trades. That's why Mark Douglas emphasized something most traders ignore. Your trading results are a direct reflection of your beliefs and identity. To change your results, you must change the beliefs that drive your behavior. Let's explore how to uncover, challenge, and reprogram the beliefs that are silently shaping your trading destiny. Lesson 41, you trade who you are. Douglas said it clearly. You don't trade the markets, you trade your beliefs about the market. That means your mindset, your self-image, your emotional conditioning, they all show up in your trades. If you believe I always lose, you'll subconsciously sabotage winning setups. If you believe I'm not good with money, you'll take profits too early or let losers run. Until you confront these internal scripts, your outer performance won't change. Trading is 80% identity, 20% mechanics. Lesson 42, your beliefs create your reality. Beliefs are not truths. They're assumptions you've accepted as facts. Maybe you grew up hearing money is hard to make, or you have to work 12 hours a day to deserve success, or I'm not good at math, so I can't be a great trader. Douglas warns if you believe these things, even subconsciously, you will act in ways that confirm them. It's not the market stopping you, it's your belief system playing out through your actions. Lesson 43, identify the root of your trading patterns. Do you notice repeating behaviors? Cutting winners short? Overtrading after a win? Freezing after a big loss? These aren't random. They're patterns driven by beliefs. Douglas teaches that the first step to change is awareness. Ask yourself, what do I believe about success? What do I believe about money? What do I believe about myself as a trader? Journaling your thoughts after trades, especially emotional ones, will reveal these hidden scripts. Lesson 44, challenge limiting beliefs with evidence. Once you identify a limiting belief, don't just accept it, challenge it. Let's say your belief is, I'm not disciplined. Look for counterexamples. Have you ever followed a trading plan perfectly for a week? Do you show up to study charts every day? That's discipline. Douglas emphasizes that beliefs only hold power when they go unchallenged. The more you confront them with evidence, the weaker they become. Eventually, your identity starts to shift. Lesson 45, replace outcome thinking with identity thinking. Many traders say, I want to be a profitable trader, but what they really mean is, I want to win trades. Douglas flips this around. Focus on being the kind of person who trades well, not just someone who wins. Stop thinking, I need to make $500 today. Start thinking, what would a professional trader do in this moment? Every decision becomes a vote for the identity you want to build. You're not chasing profits, you're becoming someone who deserves them. Lesson 46, visualization rewires identity. The brain doesn't know the difference between real and vividly imagined experiences. Douglas recommends using visualization to reprogram how you see yourself. Each morning, close your eyes and visualize yourself reviewing your trading plan with clarity, executing trades without hesitation, walking away after a loss with calm confidence, feeling neutral after both wins and losses. Do this repeatedly, and your subconscious begins to accept this identity as real. Soon, your behavior starts aligning naturally. Lesson 47, break the success punishment cycle. Here's something that surprises many traders. Some people fear success more than failure. They feel guilty when they win big. They unconsciously sabotage gains. They're uncomfortable holding on to wealth. Why? Because of early programming. Messages like rich people are greedy or success makes you arrogant. Douglas calls this the success punishment cycle. You win, then find a way to lose it all. To break it, you have to realize you are allowed to succeed. You are allowed to keep money. You're not betraying your past, you're building your future. Lesson 48, upgrade your inner self-talk. Every trader has a voice in their head. Sometimes it says, don't mess this up. You're always wrong. You better win this one. That voice becomes the soundtrack of your performance. Douglas teaches, talk to yourself like a coach, not a critic. Replace, I suck at this, with, I'm learning. Every trade makes me sharper. Replace, why did I do that again? With, what can I learn from that moment? Over time, your inner world becomes your competitive edge. Lesson 49. Identity change comes from repetition, not motivation. You won't rewire years of mental conditioning in one day. Douglas reminds us that transformation happens through consistent, repetitive action. You don't become a disciplined trader by reading a book. You become one by acting disciplined every single day. The more you behave like the trader you want to be, the more that identity becomes natural. And eventually, you stop trying to be that trader. You just are. Lesson 50. Who you become is the real profit. Profits are nice. Freedom is the goal, but perhaps the greatest reward of trading is this: you are forced to evolve. Douglas believed that trading, done correctly, is a journey of personal growth. It strips away illusions, it exposes fears, it pushes you to face the truth about who you are. And in the process, it gives you the opportunity to become someone powerful, focused, and free. That's the real edge. That's the real win. Final thought, upgrade the trader, not just the trade. Your strategy can only take you so far. If your mindset, beliefs, and identity don't match your goals, you'll keep falling short. But when you reprogram the way you see yourself, when you believe in your ability to grow, when you trust your system and respect your process, then you stop forcing profits and start attracting them. Congratulations, trader. If you've made it this far, you've just absorbed 40 of the most powerful trading psychology lessons from one of the greatest minds in market psychology, Mark Douglas. This wasn't just a list of tips. It was a deep dive into what truly separates amateur traders from professionals. And now let's take one final look back, because repetition cements mastery. What this all means for you. You now have a blueprint, a psychological roadmap to build a trading mindset that is calm under pressure, focused on long-term success, immune to the chaos of short-term results, rooted in discipline, clarity, and self-trust. Mark Douglas didn't just teach trading psychology, he taught mental mastery, a way of thinking that turns market chaos into personal growth. He believed that the real edge isn't in the strategy, it's in the trader. And you, by taking these lessons seriously, are already stepping into the mindset of a professional. The trader you're becoming. Imagine this. You no longer flinch at losses. You no longer overreact to wins. You don't hesitate, overtrade, or break your rules. You execute calmly, clearly, consistently. You've become a trader who trusts the edge, controls the controllables, stays emotionally neutral, learns from every trade, win or lose, and most importantly, you've become a trader who can last. Because trading isn't about who wins fast, it's about who endures long enough to let their edge play out. Final words of motivation. There's no magic bullet, no perfect indicator, no shortcut to success, but there is something more powerful. A trader who has mastered their mind. You now know the path. The question is, will you walk it? Will you commit to journaling every trade, reviewing your behavior, not just results, honoring your risk plan, showing up with patience even when it's hard? Because every single moment you follow the plan, every time you choose discipline over emotion, you cast a vote for the trader you're becoming. And that trader, that version of you, that's the one who survives, who grows, who wins. If this video helped shift your mindset, even 1 degree, do yourself a favor. Rewatch this video monthly. Bookmark your favorite lessons, share it with traders who need it, and most of all, apply it. Wisdom means nothing without action. And hey, if you're ready to keep growing, subscribe to the channel. We're building a community of traders who trade smart, not emotional, who value mindset just as much as money, and who are in this for the long game. The markets will always change, but your mindset, that's your true edge. This has been 50 trading psychology lessons from Mark Douglas. I'm Psychology of Profit, and remember, the market rewards consistency, not brilliance. Your trading journey starts and ends in the mirror. Control your mind, and the profits will follow. Until next time, trade well and trade wisely.